going to be like, I can't hear me anyway.
What was his name that passed? Steve
Carney.
Steve Carney. That guy was so good. He was like a classic, like he looked like an Italian mobster.
Yeah.
And by the way, I'm not surprised that he passed away. This guy looked like he never saw a meatball that he didn't love. You know what I mean? And so, because didn't he have a heart attack or something?
Yeah, he did.
Yeah, good grief, man. Take care of yourselves, guys, please. Please just go. You know what? I'm going to take a PSA. Just go walk today. You know, if somebody's listening to this show and you're like, man, I don't even know where to start. I feel like my body, I've just let it go and I don't know how to take care of myself. I want you to look. Who knew I was going to go here today, guys?
Not me.
Look so far past the mirror and just look at your ability to function with your family and in your business energetically. Look at like your heart health. Just start there and just start with a walk, right, man? Like,
yep.
People are like, oh, do I need to join a CrossFit gym? I don't know how to do that. No, you definitely don't. As a matter of fact, you'll just quit. But you know what I hear about this report, the reason I'm saying this is this report brought to you by our friends at Keeping Current Matters. The guy that used to deliver this, Steve Carney, he was an obese guy. He was amazing, right? But he looked, again, just envision like a big Italian mobster, and he had an East Coast accent. And he has a heart attack and dies. And by the way, Jesse, I could have one also. Mm-hmm. But it's not surprising.
Yeah, but the likelihood is less.
And I look at Steve and go, that guy his quality of life was not what it should have been.
Yeah.
And that's unfortunate, you know? So let's get back into real estate, shall we, guys? All right, let's jam this thing out. Fed Chair Powell signals time has come for a September rate cut, and he made the September rate cut. That was a quote on August 23rd, 2024.
Yeah, and they actually made a bigger one than anticipated.
Yeah, this is the Fed funds rate. They dropped it by a half point. And this is very good for our auto loans and all those kinds of things. As a matter of fact, it may have been a big enough cut that some people could actually go lower their auto, like refinance their auto loan rate. Most folks did not know you can literally refinance an auto loan rate. So
I should check mine out, see where it's at.
Yeah, I don't know. It may or may not make sense, right?
Mm-hmm.
And here we go. They wanted a voice wariness about the job market. Let's keep talking. September Fed meeting and what's ahead for mortgage rates. Well, Jerome Powell said on August 22nd, the time has come for policy to adjust. The guy was acting like he was Winston Churchill. They've given him a lot of power. So it's, honestly, Jerome Powell is probably more powerful than President of the United States. Oh, my gosh.
There could be a lot of truth to that because there's a lot of things he can do that he doesn't have to go to Congress.
Yeah, this is crazy. Yeah.
Right? The way everybody else does.
Correct. Inflation is approaching target rate. So they have the Federal Reserve target rate for interest rates. For inflation is 2%. Guys, what's funny is you see this 5.3%. Well, this is I don't know. This is kind of interesting. Core personal consumption expenditures, PCE price index. You're like, could they make it any more complex? Here's what we know. You see that 5.3%? Mm-hmm. We know that actual inflation was like 8.
Yeah, it was big.
It was like 8%. Well, they're hitting 2.6%. They don't want the economy to completely Thelma and Louise off of the Grand Canyon. So unemployment rate is rising, but still below average. So what's our average from 1948 to 2023? What's the average unemployment rate, Jesse?
5.7.
Yeah.
So we're still
since 1948 they've tracked this thing. My father was born in 41, mom in 42. This is an old piece of data, right? It's
what's interesting, if you were actually to take out the 2020, that brief period where it was so high.
Yeah, that's a fluke.
I'm betting that it's what, 4.5, 4.7.
Yeah. Because look at this.
Because that
guys, look. Okay, so 2020. Here's your months. This is This is April, May, June, July, August, September, October. So basically from April 2020 to June of 21, it was above average. But look, Jesse, read those rates off. Just guesstimate.
So it got up to 15 or just under 15, 13, 11,
10,
10,
11, 10, 9, 8.
So
that's not normal, right?
No.
So do you know what the real average is? You know what would be fun?
probably 5.
We got to go run this chart and pull out. We got to pull
Trying
out.
to pull out those
only,
dates.
only,
Only
you know
the-
what I'd pull out?
only
I'd pull
the
out
3
6
months.
months.
Yeah.
I think you pull out 6.
Yeah,
This is
anything above 8.
still a function of COVID, meaning, we'll give you this 8-month period here.
Yeah, because there was a lot of states that were still closed.
Yeah. And guys, we're a real estate program. Why are you talking about unemployment rates? Guys,
Because
this is what drives, go ahead.
It all of this stuff affects the real estate market.
You bet it does.
All of it. The inflation rate, the unemployment rate, the GDP, all of it affects how it's going to come across to real estate. So here's what's interesting is people think, and this may be why we have so many such spiking inventory. People hear, oh, interest rates are going to drop. Oh, let's go. The problem is we won't see the effects of that probably for 3 to 6 months. Mm-hmm. And I'm talking about is in mortgage interest rates.
Yeah.
Because the mortgage interest rate already adjusted when they announced it.
Correct. Instantly.
Right? In fact, when they actually did the half point drop, interest rates rose a little bit because it was good news.
Yeah, guys, mortgage rates actually went up when they lowered the Fed funds rate by 0.5%.
Because it had already anticipated a 1/4 point. So when they got a 1/2 point, it made it more positive for investors, right? If you get more demand, the prices are going to get better, which means they're going to go up.
Yeah. I mean, look, this is why this is in our monthly market report, right? Jesse, this employment data. 80% of economists surveyed by Bloomberg recently predict the Fed will make a 1/4 point decrease to a range of 1/2 to 5.25% in September. Duh, they did it. Most economists expect 2 cuts this year. We talked about this a little bit earlier, right? In our when we were live on the radio. And what's interesting is 11% of economists said they think they'd have 3 cuts this year. Well, we'll see, right? Generally, the rate cutting cycle is not one and done. 6 to 8 rounds of rate cuts all through 2025 look likely. That's Lawrence Yun, who's the chief economist with National Association of Realtors. So this is kind of fascinating. Mortgage rates. So everybody wants to know, Jesse, where mortgage rates are going to go. You had it on your phone. I glanced. You actually had rates. You were looking at rates.
6.25 today, and that's not what people are getting. That's what it would be if you didn't have any points.
Yeah, if you didn't go get some seller concessions
or the mortgage company was buying it down, right?
Yeah.
So it was 6.25 for a conventional 30-year fixed.
Yeah. So, here's what they are saying. I love to talk about they. Fannie Mae, which is government sponsored. It's an entity that it's a whole conversation about who Fannie Mae is. The Mortgage Brokers Association, the National Association of Realtors, and Wells Fargo, their analytics firm. They're all saying, well, we think by the end of 2025. Well, here's what's funny: those rates aren't very low. They're actually not predicting rates to be that low. Maybe 5.75.
The lowest one is Wells Fargo at 5.5.
And guys, I got news for you. Do you realize how many buyers? We're working here from Larkin Group headquarters downtown right now. We probably have agents. I hear people walking in the door up there. They're probably hearing this whole. You better be listening to the show, you guys. Do you realize how many buyers you have? How many buyers we're working with that are waiting for a big rate drop?
So here's what's interesting, and I think this is going to bite some people in the butt.
I don't know.
I was actually down to the title company yesterday, and Jeff was on the phone with a realtor who was indicating that, well, I'm just waiting until they get back to 3 or 4%.
The realtor was?
Yeah, there was and
What was he or she waiting for?
and I'm not sure, but when in history did we see rates at 3 and low 4%?
Well, watch this. Watch this.
I think it was only COVID
60
when it got to 3.
Watch this. 50-year mortgage rate history. Okay. You know, this is going to send me to the St. Louis Fed. Is it? It's not. Here it is. The Federal Reserve Bank of St. Louis.
Okay,
I
let's
love
look at
this chart. I've been here a million times. Okay. Would you guys like to know where rates have been? Watch this.
Okay.
That's 71. Okay. First of all, 71 was 50 years ago. That's shocking, isn't it? All right. You ready for this? Rates were at 7.5% in 1971. They peaked. We've talked about this before.
Yep.
They peaked in 1981 at like 18%.
18%.
All right. They dropped to 6.8% in 94.
Okay.
They dropped to 5.26% in 2004.
Okay.
They dropped.
Okay, right there. No, right there.
Okay, they dropped to 3.4% in 2013.
Okay.
Then our bottom, Jesse, which you know was a 2.7-ish percent. Okay.
Okay.
Okay. So in 50 years, they've been
Twice.
under 4% twice.
So
Ever.
So those two times are so close together and so near to where we're at right now.
Uh-huh.
This is why people are just expecting that it's going to be, it's a foregone conclusion, then that's going to happen again soon. Both of those times were when the market or the Fed was like, okay, we have got to get this under control. Just like they did in 22, right? Holy moly, we have got to get this under control.
Yeah.
So the only way I see that happening is if we actually have a real estate meltdown again, or some kind of worldwide pandemic again, right? Because it's only when there's trouble that actually happens. It's when they force it.
Yeah.
And so we'd have to have a pretty massive recession. I think for that to get down to 3,
you'd have
or 4
to have
again.
You'd have to have a reset. And here's a question. This is actually a funny conversation about, earlier I talked about a pace line in biking and how home sellers, you need to be first in your neighborhood, not last. If you're not first, you're last. Ricky Bobby.
Yep.
Okay. Last night I mentioned a cold plunge. So I bring these 3, my son and 2 of his buddies come over to my house after we hop in the cold plunge. Friend of mine by the name of Ben Hansen. I'm working with Ben. Ben is one of the top spa dealers in the United States. And Ben has gone out and created a partnership, and they've created a cold plunge unit called Ideal Spa Plunge. Nice. It is literally a spa unit, meaning, guys, like your hot tub, fiberglass, lights action, motion, lights, all the same functionality. It is stunning, right? And so I'm working as an ambassador for him. By the way, if you want to know about these units, envision a hot tub. It actually is a hot tub. It can go up to 107 degrees.
Oh, wow.
Mine's set to 55. You can't do that in like 5 minutes. That would be like a day.
Yeah.
Mine's set at 55. Circulates, cleans like a hot tub with ozone and chlorine or chlorine,
nice.
But typically ozone. And so I was talking about with these kids what the cold plunge does, because people are all, cold plunging was like this big fad for a while, and it's kind of ebbed, and that's fine. What it is for me is it's a reset. Mm-hmm. And this morning they loved it. By the way, they hated it, but they loved it. It's like a love hate. So this morning I get up, I hike with Max. I go over to the Temple Quarry Trail. I come off the trail. It's like 7:45, and I said, you know what? I just wasn't feeling awake.
Right.
And what's funny is, you know what I start craving? A cold plunge. Once you start,
it'll wake you up.
Once you go, you don't go back. I literally got in for 60 seconds. It's all the time I had. And the reason I got in is it's a reset, and I submerged and I came up and I did this. You know what I mean? And then once you figure this out, especially at 55 degrees is not the worst. I used to do 45. I got out, and then the endorphins came through my body, that electric feeling, and I was reset. I was reset. So as an aside,
I'm going to come and try that.
Oh, you got to see it. And here's what's so fun. Because of the way this thing's designed, not like I was using a freezer, an actual freezer from Home Depot. You can circulate lots of people through it one after another, because of the way that it's keeping itself clean.
Right.
So it's called Ideal Spa Plunge. You almost won't find it online right now. It's brand new, but I'm happy to tell you a little bit more about it. And so I'm partnered with Ben on this. So it's a reset. And here's where I'm going. The Fed there would have to be a major economic event for them to reset to sub 4, Jesse.
Yeah, I think so too.
What we call a major economic event. It's kind of a term we throw around.
I'm not saying that won't happen, but I believe that's what will have to happen for us to see that.
Yeah, by the way, our show's brought to you by, this is so funny, not the St. Louis Fed, but I love that I always use the St. Louis Fed's mortgage history chart. Our friends at Guild Mortgage, Chantry Abbott and his team, Guild Mortgage, just so freaking great. So great at what they do. It's interesting. Chantry is the kind of guy where I'm texting him, Jesse, almost daily with my own economic mortgage finance questions.
Right. Yeah.
He kind of works like a, I mean, he doesn't pretend to be a financial planner. Right. But he kind of works like a pastor, a financial pastor.
No, that's good. Financial pastor.
So guys, if you're thinking about getting a mortgage, refinancing a mortgage, what I love with Chantry is this is the kind of scenario he'd run is, hey, Jesse, let's look at all of your stuff. Oh, okay. So look, it looks like you have this student loan over here. And then, but you still have this random little credit card debt that you've been hanging on to with Chase for a while. What we could do is we could move all these around, pay this one off, add this here, subtract. I think that's going to reduce your monthly payments by about $230, first of all. Oh, that would be awesome. And it's going to help you qualify for a loan with a better rate.
Right.
So, show's also brought to you by our friend Tom Christelaw, like Christ Elah. Tom Christelaw, he's with Dixie Cable Tech. These guys do home automation. They can make all of your cool automation invisible. They can come in and honestly, they could put a $200,000 home automation system in your home, or they could just help you. Like if you're listening, we have a lot of listeners who fall in this category, listeners who are like my parents. My parents are just over 80. Hey man, don't be mean to the old folks. They're the best generation.
My stepdad just turned 90 on the 30th.
They don't do tech. I mean, they text. They certainly text and Facebook and Instagram, but they don't want to set up their their Sonos system. So if, say you're either like me and you're not tech savvy, or you're elderly, you're older and you just come from a generation, but you say, man, I really want to have just this little thing. It's a small thing set up in my house. I can't figure out, I have 3 controllers. I can't make this all make sense. Tom can do this for you. Tom Christelaw, Dixie Cable Tech. I want you to message us and we'll give you his contact information. I want to shoot back over here, Jesse.
That's a good business because there's so many of us.
Lots of people need it. By the way, do you want to know what else I do? I have a TV that's sitting on like the regular TV stand that it came on, sitting on my hutch in my home right now up above Main Street. And I was looking at it last night and just above it, I saw the power plates. I said, I really need that TV hung. And you know what I said to myself? I don't want to hang that TV. You know what I want to do? Ride my bike, hang out with my kids, sell real estate, hike with my dog. Do you know what I mean? Like go be effective, serve friends.
Go do what you do.
Like because I do some work with men's groups. I don't want to hang a TV.
Yeah.
I don't want to think about it. I don't want to buy the parts, right? So this is where a guy like Tom comes in. All right, timing the market is basically impossible.
So it goes back to what we were talking about, right? What happens with the Fed, we're going to see the effect of that 6 months from now, the true effect.
Well,
when we look back
yeah,
and see what happened.
Correct. So let's deploy this entire idea. Timing the market is basically impossible. If you're always waiting for the perfect market conditions, you're going to be waiting forever. That is a Sandlot reference.
It's true.
Buy now only if it's a good idea for you. I want to qualify something. This is Jacob Channel with LendingTree, senior economist with LendingTree. LendingTree is a massive billion-dollar corporation. Senior economist. Do you think he's smart?
Yeah.
I mean, the guy might be a jerk, but he's smart. I don't know. Whatever, right? We you know how we like project what we think about people because they're smart, because he was quoted. Buy now only if it's a good idea for you. Jesse, I don't think he's saying only if it's a good idea because it's dangerous. I think what he's saying is always only buy now if it's a good idea for you.
Right.
You should never.
Not because it's a good or bad market.
Yes, this is it.
Right.
This is it. Right.
Because who says what's good or bad?
Correct. All right. The market is balancing. And this is what's important. Earlier on the show, we said we went through a market shift. When we talk that way and we talk about sellers needing to reduce prices to get in line with the market, what people hear, what do they hear?
It's crashing.
Correct.
It's not.
The market is actually balancing. This is a really important message for our clients. Guys, we went from 3.5 to 5.5 months of inventory. Okay, that is an extreme shift. However, Jesse, how many months of available homes for sale is considered a balanced market?
5 to 7.
Bingo. All we're doing is going back to normal. But what happens is this. In the moment, the deceleration feels weird.
But it
Right?
also does it 3.5 to 5.5 definitely changes how your pricing strategy needs to be. It changes.
You betcha.
You are no longer in a seller's market. You are in a balanced market. Nobody has advantage. You have to be smart. You have to be strategic.
There is no more, I'm going to see what I can get. Don't see
Wrong
what
market
you can
for
get.
that.
Wrong market.
Because you'll end up getting less money if you try that.
So moving forward, Jesse, what defines a balanced and neutral market? In general, housing market with 5 to 7 months of supply could be described as balance between buyers and sellers. The end, right? Let's keep moving, all right? So a balanced market, a seller's market is under 5 months of inventory. A buyer's market is over what, Jesse?
Over 7.
Yeah, over 7. We're at 5.5. We're not in a buyer's market, but we're not in a seller's market.
But we do have a segment of the market that actually is in a buyer's market, and that's nightly rentals.
Oh, buddy,
Nightly
let's
rentals,
talk about
there's over a year of inventory.
it. Oops.
So,
But it seemed like such a good idea. But I'm a dentist in Bountiful, and I heard that all of my buddies were buying rentals in St. George, and it seemed like such a good idea to go down to Desert Color and buy one, except I came to find out that I can only get like 25% occupancy, and it's not going the way I wanted. Does this sound like a typical scenario?
Yep. Especially when everything changed, right? The interest rates went up. The market flooded with nightly rentals. The amount of people that were traveling kind of went down for a little while.
I'm telling you right now, I was on the phone not on the phone, I met face to face. I'm selling the Miles house on Main Street, historic nightly rental. I had my good friend Kendall Clements, who, by the way, is actually going to come on the show, Jesse, probably next week with us.
Oh, cool.
I got choked up. He's with Escape Rentals, Vacation Properties. He said, dude, there's been a dramatic decrease in how many people are booking nightly rentals across the board. Now, the interesting part is, do you know that we run 70% occupancy on our property? And he was like, oh my gosh. He said, that's too high. It means you're not asking enough per night. Mm-hmm. He said that 60 is a target.
Interesting.
So I'm going to keep moving through here. Homes are sitting on the market a little bit longer. Sellers are receiving fewer offers. More buyers are insisting on home inspections and appraisals. And inventory is definitely rising on a national basis. There's nothing weird about buyers insisting on home inspections and appraisals. Can I tell you a quick story?
Yeah.
A good friend of mine, you're like, well, you're the host of the show, but just for fun. A good friend of mine came along and wrote me a full price offer on the Miles house. We didn't even get it to the multiple listing service. He said, I want it cash. Sent me a text at 7 a.m. 2 mornings ago. I want your house. I said, well, I've committed to show it to 4 more people. I showed it to 4 people in one day, Tuesday. Yesterday, we went to contract.
Nice.
I'll close as soon as you want. do you know that I sent him a contract? He said, just send me the contract. I sent him the contract. What did I give him? A due diligence period.
Yep.
I sent him all the disclosures last night. I walked him through the fact that, dude, it's built in 1869. You know what I mean? Like we've dealt with stuff.
There's a lot that comes with the house.
We had a leak. We had this. We had that. We treated for this. I, as a seller, insisted on giving him an inspection period.
Yeah.
It's not abnormal, guys. Throw away what happened in 21. Throw it in the garbage. It was an absolute, completely remarkable period. It was not normal. All right? This is so normal. True. Homes are sitting on the market a little bit longer. Correct, Jesse?
Yep.
Days on market. I'm going to take us back to our chart. All right? Days on market. But it's not crazy. You know, days on market were actually longer.
So you're looking at median days right there, just so you know.
Should we look at average?
You can look at both and talk about both if you want.
Well, let's look at it. So here's my point. Average days on market are actually not up recently in Washington County. They're not. And the median days on market are actually really not up not recently. Mm-hmm. They're not up. It was actually taking longer to sell a home earlier this year. Isn't that fascinating?
Yep.
But coming back across the board, you're going to see that nationally, days on market are up just a little bit.
Well, and if you look at the market overall, right, with everything in there, it is up too, because that brings in land.
Well, yeah. And Jesse, should I help people understand how statistics are manipulated?
Yep.
Okay. I'm going to share a statistic with you. This is nationally. Did you know that days on market are up by 8.3%? Okay. That sounds like a lot. Yeah. It's taking nationally an average of 53 instead of 44 days to sell a home. Yeah. Do you get my point? Like, it's taking an extra week. But if you hear they're up by 8% and they say it in a reporter's tone. Mm-hmm. Hello, this is Bob Newsworthy reporting from Wall Street. It is taking sellers an average of 8% longer to sell their home. You're like, oh my gosh, the sky's falling. Yeah, it's taking an extra week, dude. Yeah. Big deal.
So I want to hit on something that we talked about earlier, because we said a home, if it's priced and marketed correctly, should be sold or under contract within 30 days. Mm-hmm. But wait a minute, we just said 50 days. What's the difference there?
Yeah.
Between the 50 and the under 30. I
want you to speak to it.
So,
by the way, you're going to love this because this is our podcast and I can do whatever I want. I'm going to run in the restroom that's got St. George on it, George A. Smith, while you answer it. You're leading the show now.
All right.
By the way, we literally have St. George on the door of our restroom. So as you walk in, how creepy is it, Blake, Mal? You're like, and it's those old photos where he's not even looking at the camera. You're like, that's actual St. George. So that's George A. Smith, what they call the potato saint. We're going to pause this. Don't lose this. Do you have your thought?
Yeah.
George A. Smith. So this is fun. You guys need to know this. So when the pioneer settlers came here, 1800s, right? 1850, more or less, people started getting super sick. And what had happened was they were low on food. Duh. Guys, can you imagine the 1850s here? There's nothing, right? There's no tech. There's no air conditioning. There's no glass in buildings, so to speak. What happened is they were low on food and they started giving the adults the potato peels, and the kids were eating the potato insides, the flesh. Well, guess who started getting sick? The kids. And George A. Smith one day says, wait a minute. So they started giving the kids the peeling as well, the peels, and they stopped getting sick. And they found out that, drumroll please, most of us know as adults, there's almost no nutrients in the inside of a potato. It's actually in the peel. They call him the potato saint, George A. Smith. How do you like that, Blake? So Jesse, share your thought.
Okay, so what I'm talking about here is when we look at the local market, the average days on market are 58. But then when you look at the median days on market, it's 34. So what that does is it takes away the outliers, right? Because of that 58 days, most of that time is spent with sellers trying to find the right price that they could actually get an offer. Once they get to the right price, they're typically under contract within 15 days. And the reason I know that is because I dive into the history of listings all the time to go, okay, how long does it actually take to go under contract? And that normally is less than 30 days, but most of the time on an average of 15 days once you hit the right price. So that's why it seemed like, well, wait a minute, you guys said a different number earlier than you're saying now. And that's why, because the average takes in all of them. And we're just looking at, okay, what actually happens after you hit the right price, right? And so that's where it comes in at, under 30 days. We're giving it the benefit of the doubt that if you give it 30 days, you should be, and you don't have an offer, you're priced incorrectly. And we're in a market right now where buyers just aren't coming if you're not priced correctly. Very few sellers are getting an offer if they're too high. And a lot of times you're not even getting the showings you should get. That's the actual indicator. Mm-hmm. Is, are you getting showings? Are you getting enough showings?
Correct. So, and here's a rule of thumb, just for fun. So if your home is, I'm going to say under $500,000.
Okay.
I want to see 10 showings in a month.
Yep.
Like literally.
And
10.
that's probably 2 to 4 a week.
Yeah. And
I think it's more than that for under 500,000.
Yeah.
In a month, you should.
But I'm trying to be pretty generic.
Okay.
Look, listen, if you have a $3.7 million home in Entrada,
that's different.
Guys, you're only going to get a handful of showings ever before you sell it. How many buyers? Look at the funnel. How many buyers at the bottom of the funnel can spend 3.7?
But here's what's interesting about that. Even in the luxury market, the ones that are selling quick.
Yeah.
So that even holds true in the luxury market where.
Yeah, but I mean not numbers of showings.
Not numbers of showings. Numbers. But they're the ones that sell pretty quickly.
So let's keep moving through this, Jesse. I kind of overheard this thing, ran into the bathroom, and I was listening to what he was saying. Sellers are receiving fewer offers. Average number of offers received in the most recent sale is down from 2023, 3 offers down to 2.7 offers in 2024. Inventory is increasing. We've talked about this. The number of price reductions is increasing. Should we jump back over to our local data?
Yeah.
Can we see?
We don't have that, but
we have price trends. We have price trends.
Price trends is all over the place. And I don't really like this one because it shows month by month, and that's only as good as the homes that sold that month.
Ooh. So this is, by the way, here's another piece where data can throw you off. If you
the prices are up for January.
Well, look at this. Well, yeah. This is kind of fun. You guys ready? Average sales price in December of 2023 was $598. Just hear this out. Average sales price in January of 24, a month later, was $710. You mean home values went up $112,000 a month? No. What happened is in January, clearly somebody sold a $3 or $4 million home, and probably a couple of them.
Right.
You know what I mean?
So
it's not right.
Looking at it month over month is really dangerous when you're looking at the prices. But it gives you a trajectory.
But let's look at this, Jesse. Average number of price reductions is increasing. In January of this year, there were 182,930 price reductions across the country. In August, there were 330,000. That's not double, but it's up like a lot. Okay. It's a massive increase. Massive increase. This is realtor.com where the price reductions are reflected.
Oh, we don't have it by the month on ours. We just have it by the week.
Guys.
I was going to pull it up.
Price reductions are increasing, right? This is because the market is going through an odd little shift. Oh, by the way, you'll see it in that chart. It's in that chart that you're looking at right now. And if you want me to look at it, I'll look at it. So, guys, the faster housing supply increases, the more affordability improves, and the strength of a seller's market wanes. So, and this is Mark Fleming with First American Title. There's a direct relationship. right?
Oh yeah. So we're up, February, March, we were seeing 160, 170 a week.
Okay.
Now we're up to 200 a week.
Yeah. Yeah. That's a big increase, right?
Price reductions.
In price reductions. Top 10 metros. Well, which metros are buyers markets right now? Well, by the way, this is not going to have St. George in it, right? But I mean, if Salt Lake City were in this list, it would reflect it. It's a big enough city, right? Places like Cape Coral, these are buyers market. Cape Coral, Florida. We've heard our buddy at Reventures talk about this. McAllen, Texas, New Orleans, Louisiana. Is that ever been a seller's market? Deltona, Florida, Miami, Florida, Honolulu, Hawaii, Jackson, Mississippi, Jacksonville, Florida, Tampa, Florida, Memphis, Tennessee. Jesse, 1, 2, 3, 4, 5 of the top 10 buyers markets are in Florida.
Yep.
Ouch. Okay.
Well, and that has a lot to do with the insurance problem over there. Like insurance companies are literally leaving the state of Florida.
Because they're like, hey, you guys keep having hurricanes. We can't deal with this crap.
Yeah.
Right? Which metros are sellers markets right now? New York, New York. Hartford, Connecticut. Springfield, Massachusetts. Guys, spell Massachusetts. Don't even try. 3 of the watch. San Jose, California. Do you know why that is? Because it's where Google is. It's always that way. San Francisco. Okay, listen, everyone in this room, is anybody surprised that where people are crapping on the street is a seller's market?
Yes.
And listen, don't step on a syringe. Isn't that gross? Anyway, Seattle
too.
By the way, Seattle also crapping on the street and using syringes. I talked about this on the show that I was watching people just openly do fentanyl up there. Washington, D.C., Kansas City, Missouri, Chicago. Is this baffling? Guys, Chicago is the most dangerous city in America. 5 of those are in the Northeast.
Interesting.
2 of them are the places where they allowed tent encampments and homeless people to dominate.
Right.
All right, let's keep going. The importance of pricing it right. So I want to get to this. Homes priced right are selling very quickly.
Yep.
But homes priced too high are deterring prospective buyers. Thanks, Lawrence. We could have told you that.
And we just said that, right?
Well, you said every word.
What's happening? They aren't even getting showings.
I'm in it right now.
If we're priced incorrectly, I'm just like,
I'm in it right now with a couple of clients that are going to have some.
Within a week.
Let's wrap this because we're kind of, we've gone a little long today, but this is fun because we got a lot of good content here, right? 2 things you need to understand. What is the seller's motivation? What do they want? Sure, they want as much as possible. This is for realtors. But what else? Maybe it's a bigger home because their family has grown. Maybe it's to be closer to friends and family. Do you want to know one of the coolest conversations I had with somebody this week? The guy is a business owner. He owns 9 businesses.
It's a lot of businesses.
Bought his home 3 years ago out in Little Valley. They'll make something on it. And you know what he said? A home's not an investment. It was such an interesting comment. A home's not an investment. We often on the show, I think, try to pitch as an investment. I think we need to be clear.
Yeah.
There are investment type benefits from appreciation.
Yeah.
But he was really clear. And here's what he said. Just tell me what the price needs to be. We're moving. Why are they moving? My wife's taking a job in another state in healthcare, and I can run my businesses from anywhere in the world. He said, just tell me what I need because I didn't buy the home to make money. I just want to move to where I need to be.
Here's what's interesting. I'm going to go out on a limb and saying because he actually treats it that way, more times than not, he'll actually end up ahead of the guy that's trying to nickel and dime his home.
Yeah, because he'll price it correctly and have more buyers.
Yeah, he'll have more buyers. He'll end up getting more money. The guy that's trying to justify his price always end up either not selling or getting less money.
Yeah, isn't this crazy?
It's weird.
So this is for realtors. Number 1, what is the seller's motivation? The actual motivation. Number 2, what is the seller's time frame? Do they need to sell as quickly as possible? Will it be a while before they can move into their next home? Jesse, there are really 3 prices for a home. There's the 7-day price, 14-day price, whatever you want to call it. There's a 30-day price, which we ask ourselves, what's the difference? Well, the 7-day price is like a bidding war, likely.
Yeah.
The 30-day price, it's probably what you'd find a buyer to buy it because you priced it right at market. The 7-day price is you priced below market and it could be bid up.
Mm-hmm.
Well, then there's the someday price. I think everything beyond 30 days is a someday price. Like maybe you'll sell it.
Maybe you will. Maybe you
I
won't.
met with a client yesterday. I mentioned I met with an investor who talked about how they liked the last agent. This is the funny thing. How many times have I told our agents in this team, your job isn't to have friends in real estate. Your job's to help your client. And helping your client means delivering news that's often not what they wanted. And 190 days later, they still own this home. Well, what's fascinating is they said, well, I definitely want to get 475. You know, what you want actually doesn't have any relevance.
No, it's what will a buyer actually pay?
Yeah. And that's hard doctrine to give to people. Like, well, actually, that's nice. That my mom always, the joke in our family was always, Tim, my brother, Tim, he always wanted when we were young, a pony. Yeah, well, Tim wants a pony.
And here's what's hard about it. If they search enough, they'll find somebody that says, yeah, I can do that. And then they'll end up exactly where they're at right now.
Disappointed because they actually
with a home
can't
that's
control
not
it.
sold, got some serious problems going on. And it was all because they looked for the person that told them what they wanted to hear.
Yeah.
And they thought the person that was actually telling them the truth was being negative.
Correct. Like, oh, yeah, this guy just didn't believe in our house.
Yep.
No, actually, I believed so strongly in helping you that I was willing to risk you not hiring me to tell you the truth. Let's wrap up with this. 5 things every seller needs. They need the house sold. They need the most money possible. They need the sale to occur in a certain amount of time. They need the least problems. And they want us, real estate professionals, to help them with relocation to their new home. Guys, what else is there, right? I'm going to wrap up this show, Jesse. This has been a lot of fun today. In summary, there's a market shift afoot, right? Is it a crash, Jesse, or something else?
I don't think so. I think it's just starting to balance out. It went up so fast, so high, it had to balance out. You can't have some, it's like a rocket. Eventually it's going to have to balance out.
And we had this funny cycling analogy about being out with the high school team last night, which I'm repping on my hat today. They did 4 90-second intervals after we climbed for 20 minutes up Turkey Farm Road. And then they did 4 90-second intervals. Do you know when you're pushing at the edge, 90 seconds feels like 5 minutes?
Yeah.
And you know what? Coach Curtis Sprague, amazing guy. He was a detective with St. George Police Department, just retired. You know what he told them before the 4 90-second intervals?
What?
Guys, I want you to stay strong for all 4, which means you need to contain yourself inside of each interval because there's going to be another interval 2 minutes later.
You don't give it all.
And here's my point. The rubber band in life gets stretched.
Yeah.
Well, it's the same thing that happened with the housing market.
Definitely.
You have to recover. They couldn't maintain that 90-second pace for the whole ride. They couldn't even maintain it for 2 minutes.
Yeah.
So the housing market can't do what it did. So we have a housing correction is happening. It's a shift. It's a correction. What is a correction? Have you hit a rumble strip, Jesse?
Yep. A few times.
Yeah, there's a whole joke behind that with Jesse. Describe your driving. You like to do what? There's a word you use.
I'm a wanderer.
He's a wanderer.
Oh, man, I wander.
Guys, Blake, Jesse's driving looks like this.
Yeah, I just...
It's like a smooth dance, but it's not smooth. Okay.
It's the way I walk, too, though.
When you, it is. When you hit the rumble strip, does that mean you rolled your car? No. It just means like, scoot back in the middle.
I better move over.
The housing market is correcting. A correction is not a crash. It is a rumble strip sending the market back where it needs to be. We think it's going back into balance. Next point, sellers, be first. Be first.
Yeah, because if you're not first, you will end up getting less money.
You will hurt yourself.
Because somebody's going to have to move, somebody's going to do it, and it does reset the pricing.
You bet it does. You bet it does. Buyers, I know you want this rate to drop to 4%. I looked at data today from every national economic outfit. Not a single one predicts rates to be under 5.7% by the end of next year. Not one. Are you telling us to buy? No. I'm telling you to take that into consideration as you wait for something to happen. If you want to wait, Jesse, if buyers want to wait because they think prices are going to come down, that's fair. By the way, they may not. Yeah. But waiting for rates is, I don't know anything. Jesse, how do people reach us?
You can either Google the Larkin Group and give us a call. You can drive right down to the corner of University Avenue and Tabernacle.
Yeah, people walk right in their front door.
Big white building with a beautiful mural. You can walk.
Big white building. That's actually the St. George LDS Temple. Hilarious. I'm laughing. He's right. It is a white building. But the big white building is like a joke we make in real estate. Yeah. It's actually a small white building. It's only 3,400 feet.
Yeah, that's true.
But we got the cool mural on it and say, hey, hit the big bell. Hit the bell when you come in.
Yeah.
And say, I want to talk to somebody. Or just visit gostgeorge.com, GOST George, the Larkin Group, Keller Williams Realty, Jesse Paul, Jeremy Larkin. It's been fun.
Thanks for having us.